Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and it's a pleasure to be back with you again to go over the last week's activity. Remember, I look from Wednesday to Wednesday, so we're looking at October 2nd through October 9th. Couple of things to keep in mind. Last week, we did have the jobs report out. Really a strong jobs report. Couldn't really complain. The average hourly earnings did shoot up a little bit more than expected, but jobs came in very strong. So questions about the economy. So far, just questions. I mean, we really don't have any answers, anything showing that we are really slowing in the economy. So I think the Fed, in terms of lowering rates, is now looking at a pretty strong reading on the jobs. Like I mentioned, the average hourly earnings went up last week, so perhaps a tad bit of wage inflation. And then the next 2 days, Thursday morning and then on Friday morning, we're going to get the monthly CPI and PPI reports, respectively. So if those come in hotter than expected, and we had wage inflation a little hotter, the jobs, still strong, I don't know what that means with the Fed. The Fed has said that they've changed their strategy, that now they're much more dovish. We did get the Fed minutes out this afternoon, and it did talk about the fact that one of the Fed officials did not go along with the half-point cut, only wanted a quarter of a point. And so we've got a Fed that maybe isn't quite united, and a lot of question marks still out there. But I do think it's going to be important to watch this CPI report out Thursday morning, because the core CPI number that we're looking at, the estimate, is for a rise of 0.2%. So I think if the market, if that report comes in and it's below that 0.2% level, the reaction recently to better than expected inflation news has been to see a lot of the more value-oriented stocks, the IWM, which tracks the Russell 2000, the Dow. Many of those areas have led the market, the financials, the industrials. So not only do I want to see whether the market goes up or down, but I want to see where that leadership comes from. So keep that in mind as we approach the CPI report, which again will be out on Thursday morning at 8:30 a.m. Eastern. All right, I want to go through and talk today about obviously the major indices, but I'm going to go through really rapid fire and go through a lot of the industry groups that have been showing a lot of strength. I'm not going to show you all of them because there are a lot of industry groups that are performing really well. We're getting a lot more breadth on this move to the upside. A lot of different areas are supporting this move to the upside. It's not just looking at the Mag 7 or just looking at technology. We're seeing leadership in a lot of different areas. So I'm going to go through the industry groups and a lot of the individual stocks as well. But first, let's start off with the Dow Jones and where we are right now. I'm showing a 6-month daily chart, and I'm going to show you the Dow, the S&P, the Nasdaq, and the Russell 2000. And I've added down at the bottom this rate of change. And if you notice, the rate of change, it's set on 65, and this is a daily chart. 65 days is roughly about 3 months. So what this is going to do is it's going to take us back to when the June CPI report came out and when the market took off from there. Well, some areas of the market, the Nasdaq, as you'll see when I show you, actually topped at that level. But many of the other areas, many of the value-oriented areas, small caps and mid caps, all really took off from that level. So I want to show you where we stand on a rate of change basis today versus where we were then. So here's the Dow Jones Industrial Average. You can see the trend remains higher. I've drawn a support line at gap support. That's where we had the big gap up. That was the day after the Fed met. We really haven't looked back. We haven't gone back yet to even fill that gap. That's down at 41.5. So that's an area maybe just keep in mind if we do see some weakness ahead, or if maybe this PPI report or CPI report Thursday, PPI report on Friday, if they don't come out as expected, that's a level that could come into play later this week or perhaps over the next couple of weeks. But looking at that rate of change, 8.2%. So over the last 3 months, the Dow Jones has gone up 8.2%. Next up, the S&P 500, similar support line. I'll show you there with the gap support. down just a little bit above 5,600. I think the number is right around 5,615, if I recall correctly. That 65-day rate of change on the S&P, a rise of 3.86%. So not nearly as strong as what we've seen on the Dow. The Nasdaq 100, again, we've got this gap support from right around when we had the Fed meeting. That comes in at about 19,300 to 350, somewhere in that range. We're now trading back over 20,000 on the Nasdaq 100, so we've got some room to the downside, but that is a gap that at this point has not filled. And notice the gap coincides almost perfectly with the 50-day moving average. So that's going to be a key area on any selling to watch to make sure that holds. How about the rate of change over the last 65 days? Minus 0.9%. So since we got that really good CPI report from June, back I think it was on July 11th, since we've gotten that report, you can see that the NASDAQ, we've seen rotation on a net basis since then, rotation away. So here's what I was talking about. There's that high just as we released that, much lower than expected core CPI number. Looking one more, let's look at the IWM. You can see as of that July move, that actually, we saw the IWM, the small cap stocks, actually make a big move to the upside and currently have their 65-day rate of change at 8.64%, similar to the Dow. So that's been the relative strength over these past 3 months. The Dow, the Russell 2000, financials, industrials, those are some of the areas that have been carrying the market or helping to carry the market. We haven't really seen a lot of upside action, and a lot of that's due to the fact that technology has not been our leader. We're getting leadership from areas that don't have the same representation in the S&P 500. Hopefully that makes sense. But I'm going to go through now, and I'm going to just kind of, speed read these charts and go through a number of individual industry groups, how they look. I'll give you a couple that are showing some resistance that we need to watch for, others that have just been flying. But let's start off with semiconductors, because that's a key part of technology and a key part of the overall market. We gapped down in the semiconductor space back in mid-July. So when technology was struggling, it was because we were struggling with the semiconductor group. We gapped down, and I've put this red shaded area in here to show you this is that gap resistance zone. It was where we had closed from on July 16th to where we had opened on July 17th. That's the area that's shaded right there. And notice we've now had multiple, 3-4 times where we've tried to get through this gap resistance area, have not been able to do so. Right now, we're in the middle of it. We've gone up as high as we've gone at any point in the last 3 months, but can we make that breakout? I think that's going to be somewhat critical. You can also see on a relative basis down below, we're coming up on what's been key industry group relative resistance. I mean, if we look at the semiconductors versus the S&P 500, this 3.42 area has been a really difficult area for semiconductors to negotiate their way through. So if we can get through that, if we can get through this red shaded area, then I think semiconductors are getting close and perhaps are on the verge of making another breakout to an all-time high. That would be incredibly bullish for the market. So we'll keep an eye on that for sure. Moving on, media agencies. I'm going to go through these pretty quickly. Top panel shows absolute price action. Bottom panel shows relative strength. So here with media agencies, you can see the relative strength picking up. And here is that breakout in price. Recreational services have a couple of key resistance levels. We cleared both of them on Wednesday, closing at a new high. I'm going to talk about a few of the recreational services stocks, namely the cruise liners, in just a little bit. But here was that big breakout in the group. And look at the relative strength. This is one I wanted to point out. We took out the recent relative high, and then we also took out the relative high that we saw last December. These are stocks that tend to do well in that last quarter. And so check that out. In 2023, last November, December, we did make that big move in this area. We've taken that out now on a relative basis. Next up, travel and tourism. This is one that's right up against resistance, kind of like semiconductors. 5 tops I count right near this 1125 to 1140 area. That's right where we closed on Wednesday. Can we make this breakout? We're seeing some relative strength in the group. So if we make a breakout, you might want to start looking at some of those travel stocks, Expedia, Bookings, and some others in that area. Those are stocks that on a breakout could begin to show some relative strength. Next up, home improvement. Home improvement topped all the way back in March. It's been a long haul to get back up there, but we made it at the end of September, and here in late September, early October, breaking out to new highs. Nice relative strength. So home improvement group, that group is an area to keep an eye on. How about specialty retailers? A lot of sideways action, slightly higher highs, still continuing to make those new highs. We just saw that this week. Monday wasn't such a great day, but Tuesday and Wednesday we've come storming back, and we are at new highs on the specialty retailers, and the relative strength has also been pretty good since that middle part of July. All right, restaurants. Restaurants, we had all the tops back in February and March. We then had the same top in August. We broke out in middle part of September, pulled back, and we have since broken out again. This is a group that looks much, much better than it did over the summer, or at least over the first half of the summer. Now looking much more poised for higher prices. Do have a negative divergence in here, though, if you look at it. Higher prices, lower PPO. So maybe we have a little bit of a pullback first, but I do think we're going to see higher prices in the restaurant area as we make our way through the balance of 2024 and potentially into 2025. Asset managers. This is in the financial area. Double top, pulled back. We had an ascending triangle. You can see the equal highs, rising lows, made that breakout, continue to be in breakout mode, and the relative strength is near a 52-week high. So asset managers looking really good right here. Next up, investment services. So investment services making this breakout right here, up at the 2300 level, also beginning to show some additional relative strength here over the last week or two. So with this breakout, I'd like to see that continue. Life insurance index, life insurance, again, part of the financials, making a breakout above the double top, continuing to trend higher. Relative strength strong there as well. Financial administration, this is a group that really couldn't get out of its own way for a long, long time. And it is showing nice relative strength since back in July, since we got that June CPI number. Recently breaking out again here over the last 4 days to new highs. It looks like it wants to go higher to me. Building materials and fixtures, another one that had the double top, actually a triple top, made that breakout, bouncing off that 20-day, turning higher, relative strength strong. And business support services, another industrial group that has been trending higher, breaking to new highs. Notice we're not getting the leadership from semiconductors. Semiconductors haven't broken out yet. So some of those key areas, I didn't pull up the internet space, but internet's another area, not really been performing that great. We're not getting that strength from the areas that we were getting it from. We're getting it from all these other groups that before we weren't showing very good breadth numbers because we weren't seeing enough areas participate. This has been a very bullish advance, in my opinion, because we're getting more and more of these other areas to participate. So a really strong bull market, rising tide lifting all boats. That's what we want to look for. And I think we're seeing that with all these groups that I'm showing you. Heavy construction. Look at all the tops. Made the breakout. Now we're trending higher. Defense. Another one. This one's been moving up for the most part since July, mid-July, but it just had another breakout. Looks to me like it's in a bull flag. Relative strength right near about an 11-month relative high to start October, pulling back a little bit from that. But I think that's because we're sitting in a sideways consolidation period here right now, as opposed to breaking out to new highs, but I do see that coming. Moving back into the technology, electrical components and equipment, I did want to point out a breakout here. Very, very nice relative strength over the last month or so. So we do see a lot of money going into that area. All right, I'm going to show you one individual stock here, and the reason I'm going to show it to you is we featured it as our chart of the day for our EB Digest subscribers. This is a free newsletter, but I put it out there today. The market had just opened, and I said at the opening bell, NCLH, Norwegian Cruise Lines, was breaking out above a multiple top here. You can see a lot of tops coming in around 21 to 21 and a half. We actually opened above all of those tops and continued moving up today. Look at that volume, 30 million shares, over 30 million shares to accompany a very key breakout. So I just wanted to point out, this is what we showed to our free subscribers. If you want to become part of those free subscribers, simply go to earningsbeats.com. Both are plural, earningsbeats.com. Scroll down, and all it takes is a name, email address. Hit that subscribe button, and we will get you set up. No credit card required. You can unsubscribe at any time. And for those of you that are on a mobile device, you can simply scan the QR code on your screen, and it'll take you over to a landing page where you can sign up with your name and email address. I'd really highly encourage you to do this. Again, it's completely free. We try to give back to our community, and I think this is one way that we can do so. So make sure you sign up. All right, getting back to those cruise lines, it wasn't just Norwegian. Here's Carnival Corp. Look at all the tops coming across. Carnival Corp making the breakout. How about Royal? Royal's been one of the stronger ones. Look at the relative strength over the entire year. Royal Caribbean's been outperforming the S&P 500, which is not the case for many of the cruise lines. But Royal Caribbean makes a breakout of its own, closing today above the 190 level. So here are some other breakouts, some other stocks that have been really strong. I would keep them on a watch list. And if you get pullbacks, especially to the 20-day moving average, that's where I think they set up really nicely to me. So Palantir, this has been one of the stocks that's in our model portfolio. I absolutely love the stock. Made the breakout back above the 32.5 level in the second week of September, and really hasn't looked back. We had a 20-day test. That turned out to be a great entry. We were at about $36, and that was a week ago, maybe a little over a week ago. Now we're at over $43. So Palantir, one of the hottest stocks in the market. ZETA Global, this is in the software space, and software stocks really haven't been doing great, but look at ZETA relative to the S&P 500. Absolutely exploding. Probably due for a pullback, but this is one of your better software stocks out there. Watch for a 20-day test. Coherent Corp, this is another one that's obviously just continuing to push to the upside. This is in the electronic equipment area that I pointed out. So the group's been strong, and this has been one of your leaders. AGX Argan, been performing well, made the big gap up back in early September, has continued pushing higher. It's overbought. I would really like to see a 20-day test. The problem with entering any of these stocks at the current price when they're overbought is that just a normal 20-day test, and on a stock like Argan, you're going to be down 12% just as you're hitting the first key area of support. So I'd prefer to see some of these stocks pull back and have an opportunity to enter closer to the support level so that we can limit our downside and hopefully have a much, much stronger reward to risk trade. Sweet Green, this is in the restaurant area. We had gotten up to the 35 area, maybe 37.5 back in May and June. Came back up again in August, 37.5, couldn't get through. Went all the way back down, close to gap support. And now here we are again, coming back up. And we did close on Tuesday above that 37.5 level, setting a new high. And then today we saw a little bit of a pullback. But I like this one again. Anything down close to that 20-day moving average makes a lot of sense for me. Netflix could be starting its pre-earnings run-up. I've talked about this one with our members in the past. I love the breakout above 700. We've been holding 700, and now today set a new high at 727.43. Netflix does report earnings next week, so it looks to me like we're going to go in with, pretty good head of steam on Netflix chart, and I would expect to have a pretty solid report based on the way this stock is trading. Arista Networks, ANET, making the breakout, setting a new high today as well. Over 400 for the first time. And we've got that 20-day moving average sitting down closer to the 380 level. Again, I prefer getting it on that level, but when you get these leaders, sometimes they just keep rolling to the upside. So you just have to determine how much risk you're willing to take. But again, this is one of those stocks that I would be keeping an eye on. Hilton, this is in the hotel area. Hotels also showing some nice strength of late. Hilton is one of the leaders, as you can see here, breaking to a new 52-week high versus the S&P 500, and also setting a new absolute price high as well. Live Nation Entertainment, I really like this stock. It's volatile, but I love the move that it's made. I think if you can get it back down closer to that 107 level, makes a lot more sense from a reward to risk standpoint, but it's showing a lot of leadership right now and on some pretty good volume. Finally, as far as the breakouts go, or the really strong stocks, and trust me, I could go on and on. I could probably pull up 500 charts. We'd be here all night. But these are ones that kind of stood out to me. Genworth Financial, you can see the top that we had probably at about 690 back in December, 690 again in July. We did get up to about $7 at the end of August, early September. But today, and really the last 2 days, we've had strong action finishing above $7. And look at the volume accompanying it. So really good action there. All right, finally, let's go into some pullback candidates. So I'm going to start with UNFI, United Natural Foods. One of my favorite trades is a gap up, followed, especially an earnings gap up, followed by more buying, and then coming back down to test the top part of gap support, which is what we're doing right now. We actually had a live trading room today. We talked about this when I think UNFI got into it during the live trading room at about 1944. It actually traded down while just a few minutes later, I think it was trading down around the the low today was 1932. So I think it probably got down right around that level. But this is one that I think could bounce back nicely from this 19 to 1930 kind of support area. Next up, PAYX. This is one that already did exactly what I look for. There's the gap up with earnings, the continuing move to the upside. Where do we come down to? We come right down to the top of gap support, and we get that breakout. Or actually not a breakout, but we do get the rebound. So this is what I'm looking for, kind of what I'm showing you on UNFI and on PAYX. These are my favorite kind of earnings-related candles, where you have a great report, big volume, get that gap up. It keeps going higher during the day, which tells me there's a lot of demand. And so when you come back down and hit that first gap support level, a lot of times that's great entry. McCormick came out with earnings and was threatening a 52-week high, but afterwards pulled back. We saw a lot of profit taking. There was a lot of good news already built into the stock. We saw the good news. We've seen some selling. I actually think this is a great entry point. When I talked about it recently with members through our daily market report, I thought 78 to 80 was pretty good support on this stock. We've gone down below 80 now. I think this is a pretty good entry area on McCormick. General Mills, another more defensive stock. You can see a double top, negative divergence forming there. We've gone all the way back down now to the 50-day, down near the PPO center line. That's what I look for after a negative divergence. I think this one's set up to perhaps turn higher. RH Inc., you can see RH had gapped up, big volume here, made the move up, hit resistance, failed, and now is coming back down towards gap support, went just below the 20-day. I actually think right around 304 to 310, I think this area is pretty strong for entry, just my opinion. SCVL, Shoe Carnival, did make a new high back in the middle part of September, has pulled back. Notice where gap support is, bottom of gap support, just below $38. Today's low, $38. We were up at 46. So watching it come all the way back down near the support level, really solid reward to risk entry here. Tenet Healthcare, THC, double top, came back down, saw a little hammer print right near this support at 150. Looks like it's trying to turn back up off of it. Again, from a reward to risk standpoint, I like the stock. BioLife Solutions, this is in the medical equipment group. Medical equipment, bouncing back, hopefully going to get a breakout in that group again. If so, this is a stock that has been showing leadership. You can see a 52-week high in the second week of August when it hit its high. Since then, it's simply been consolidating. Most stocks will lose relative strength when they consolidate. Why? Because the market tends to keep going higher in a secular bull market, but this stock's taking a break. And so you will see some relative weakness. I think, though, the fact that it's back down here near support, very close to gap support, which comes across just below the 23 level, and we got a low today of 23.21. Remember, we were up 27, close to $27. So this, again, I think sets up for a pretty nice reward to risk. ERJ, Embraer Aircraft, had the double top, had a negative divergence. Here's your reset. 50-day test near gap support, and there's your PPO center line. I like it at this level. And then finally, IMAX Corp had the double top, actually a slight negative divergence on this high. Again, we have reset the PPO back down to the center line. We've got price support and gap support all kind of in this 19. I like the 19 to 19 and a half area as support. And we closed today at 1935, trading as low as 1919. I just think this is a nice area where we could get a reversal and be able to print some pretty nice gains to the upside back up near that 22 level. Anyway, that's it for me. I really appreciate you all tuning in. I do want to say, you can follow me. I got a lot of different places that I write, do a lot of things. If you look on your screen, again, there will be a QR code. If you're on your mobile device, simply scan that QR code and it'll take you to a landing page where you can follow what we do at Earnings Beats over on YouTube, at Stockcharts, the free newsletter that we have. There's a lot of different ways you can follow us. So be sure to check that out. All right, I guess to summarize, we do have a couple big inflation reports next 2 days, especially tomorrow morning, Thursday morning, with the September CPI report that will be out. The expectation is for a rise of 0.2%. I think depending, if it comes in hotter than expected, I would expect that probably wouldn't be greeted very well. I don't think the market would react very well to that. But if we again show that inflation is not a problem, I think, again, it gives the Fed the license to continue cutting rates if they want, even with a better than expected jobs report from last week. And if you've got a good economy and maybe even a strengthening economy and rates coming down, that is nirvana for stocks. That's all I got for you today. I'll be back next Thursday. Have a great week, everybody. Enjoy your upcoming weekend, and I will see you next week. Happy trading.